Remember when the budget was announced in 2023 February? Back then, when that happened, the reaction of all insurance company was that they started to fall. So there was HDFC Life, there was SBI, even LIC. All these companies fell. So why did all the insurance companies fall? It was a simple announcement that the government said that the tax cap from 10 lakhs will now be revised to 5 lakhs, which meant only ultra HNIs and HNIs would be affected by this, who are using this tax cap a way to actually save on taxes by using this rule. But to save them, what the insurance companies did, because they knew insurance premiums would fall and they would not make as much money as they did before, they went to the FM and spoke to her on 7th of February. Just that meeting, and because of that meeting, all insurance companies went up because they thought maybe a regime change, a rule change could happen. All companies went up except one, and this was the largest insurance company in the country. In today's video, we'll talk about why the hell did LIC make an all-time low, what the future is, and what you should do about it. Okay, so before we talk about LIC, let's talk about insurance ka history as a whole. So if you go way back to the Babylonian times, the king of Hammurabi actually created on a piece of pathar the entire laws of the land. This covered everything from ownership, trade, commerce, marriage, and even fights. But what was interesting is that we can possibly say the first insurance was possibly born there, or at least in the written record. Over there, it simply said, if there is one person who owes money to someone else, but if there is disability, death, or flooding because of which he can't repay, then he is insured by these laws and he does not need to pay that. So I know insurance doesn't work like that today, but this is very close to what insurance basic understanding is. Anyway, after that, we have the VOC, or the Times of Dutch East India Company, which is roughly I think 16th century. Back then, there was a simple thing that the entire nation used to do. There used to be ships. The ships used to go around Africa all the way to East India and other places to get masalas and different kinds of spices. These spices were transported all the way back, but as you can imagine, there was no GPS and guys were just trying to travel blind. So a lot of these ships would actually die or sink on the way. Actually, that's where the word paisa doob gaya comes from. Anyway, back then they had insurance for these ships. In case a ship failed, this is the money you would get back. So that's another form of insurance that happened after that. Then something interesting happened. Let's move a little bit towards Central Europe, towards London. In London, the Great Fire happened in 1666. The Great Fire, as you can imagine, burnt a bunch of stuff down. And this was catastrophic. Surprisingly, back then people didn't even have a fire brigade. So not only was fire brigades born, but there was now insurance for events like this. It could be arson, burglary, and even fires. So property was now protected with this insurance thing. The insurance then actually gradually evolved into life insurance. Ever heard of the Halley's Comet? Well, the namesake, Edmund Halley, actually discovered a way to find mortality rates of certain age groups and based on that have insurance on life. So the idea was simple. You can basically make an algo by taking different information of different people. So my friend smokes a lot, so his chances of dying or mortality is slightly higher than my other friend who doesn't smoke a lot. And based on many inputs like this, we could predict in a population what the mortality rate could be. And insurance simply said, we will insure you for so many years, having all this information about you. In case of your death, we will give you a certain sum assured. And for us to provide this service, you need to pay a premium every single year. Now, the probability game is such that most people don't actually die at that time, especially now we have great healthcare, etc. But that premium that the insurance company takes from you is invested and grown. And actually, some of the most profitable companies in the world are insurance companies. And that's how life insurance as a concept and as a business spread across Europe. But because of colonization, life insurance also entered India. So that brings us to LIC Story. So over here, we have in 1818, the Oriental Life Insurance Company happened. This is the building. This was from the British era. Then in 1870, something interesting happened. There were about 4 or 5 different life insurance companies. The major ones came together and they created the Bombay Mutual Fund Assurance Society. This is basically like this club of 5 major insurance companies. Then in 1912, you had a basic act which basically said, we are life insurance companies, this is how we're defined. Just basic legal definitions were done here. Another amendment was done over here in 1928, and then another one in 1938. All the while, they were getting deeper and deeper into the nuances of what is insurance. Now in 1956, this is where something significant happens. There were some 200, 250 small insurance companies. All of these companies came together and the government of India passed a Life Insurance Corporation Act where it basically merged all of these companies to form one nationalized own company called LIC, Life Insurance Corporation of India. And of course, since then, LIC has done a lot and probably done really well as well. Anyway, other things we'll talk about next. As you know, one of the reasons why the government had nationalization as a policy was to control the crucial sectors. And insurance was no different. The government wanted control on the insurance sector. That's why I think LIC had a 30-year head start. It was first mover, it did not have competition, and basically the government owned it. So let's talk about the numbers over here. They have 25 crore policy holders. That's a really big number. I'm not sure if any other insurance company comes close apart from say AIG and the stalwarts, but 25 crore is a very large number. They have 2,000 branch offices, 1,500 satellite offices. But what's crazy is that they have 13.5 lakh agents. Think about that. India mein, there are more people like your uncle who actually sell insurance to a lot of people. 13.5 lakh insurance. This also makes me think, will they ever be able to do direct? Will they ever be able to do online mode? Because they have such a large base of actual agents, feet on the street. Maybe you can tell me, put it in the comments below. Tell me what you think about that. The other thing I can see here is that the total investment by the policyholders, the asset base, is 37.72 lakh crore. This is mark to market, which means all the investments which have grown are valued at 37 lakh crore. So basically when you pay the premium, that premium goes as an investment somewhere so that the asset base actually grows. So if I say open Reliance Industries over here and scroll down in the shareholding pattern, you have promoters, you have FIIs, and you have DIIs, and you have public. Public is you and me, Aam Aadmi. Then you have DIIs, which is domestic institutional investors. So over there, you will always see LIC. LIC always has a stake in all Nifty 50 companies and beyond because they have such a large asset base and their job is to invest in India, right? So over here, you can see that 2020 May, they own 6%. 2022 December, May they own 6.5%. The stake moves around a little bit, but they own something always. You can do the same thing with Bajaj, Tata, Infosys, Maruti. You'll find the same thing. They're always an investor in Indian companies. But if everything's going so well, all of this is great, then why even go IPO? And the answer is divestment, also known as selling a stake. But when the government sells a stake, they don't call it that. They call it divestment. Divestment basically means the government owns a stake in a company. They sell it to raise money for the government itself. Let me show you this. The IPO was actually priced at rupees 2,000, okay? And the government said, we will offload 5% at a valuation of 8 to 9 lakh crore. But what happened was that 8 to 9 lakh crore became 4 lakh crore and they ended up only divesting 3.5% at a lower share price of 800 rupees. So basically the market fell. So they offloaded a little bit, not as much as they originally thought. So what were the problems with the LIC IPO? I think there were 3 things that you should think about of why the market was actually re-rating LIC to be a lower valuation. 1, there was slower growth than peers. Now, growth can be of any amount, right? But you always compare it relative to its peers. And when you did a comparison with, say, HDFC Life or SBI, you will see that LIC's growth is less than them. Second, they're an agent-dependent network, and it's a weak online presence. I mean, think about it. Policy Bazaar, which does not underwrite anything on its own, it's just a distributor of other insurance companies. ने अलग ही business बना लिया just on the basis of online convenience, easy. And LIC's completely ignored it because they have all these 13 lakh agents. I think this is the problem. Again, tell me in the comments, what do you think? Do you think this is an issue with LIC? And the third thing is, all the IPO proceeds will go to the government. Let me explain this. Traditionally, when a company raises money in an IPO, they take that money, put it back in their own company for further growth, like Infosys did or Info Edge did. They put it back in the company, hired the right people, created management, reinvested to grow the company. In this case, whenever the government does a divestment, all the money goes to the government. None of the money goes, in this case, went to LIC. And the reason is simple, because the government wanted to show a higher revenue. Another interesting thing is that they kept Sunday open for all banks across the country, saying IPO ke liye subscription ke liye hona chahiye. I think that's a bit wrong, right? How can you tell banks, including private ones, to stay open on a Sunday so that the LIC can get more people to subscribe to it? I think maybe that's incorrect, and I would love to hear your views in the comments below. Let's now talk about the financials. Now, usually the financials of a company become a little boring, but I promise this will be interesting. Normally, we look at what? We look at sales, we look at sales growth, we look at debt, we look at operating profit margin, compare it to its peers, maybe rank it and find which peer is doing the best. But think about it, insurance companies aren't really producing a product. They don't have sales in the traditional sense. They're just a different kind of company. So, we'll talk about three different parameters today to compare three different insurance companies. I'm sure you'll learn something new. So the first thing we will talk about is embedded value. So this is not electric vehicle, it's embedded value, EV for short. This is basically the present value of future cash flow. Think about it, it's like you on your Netflix. You keep paying a subscription every month, but in this case, you're paying a premium every single year. So there is a certain amount of cash flow that the insurance company is expecting from you over the next few years. This basically calculates future cash flow ka present value. It accounts for multiple other things. So let's not get into that calculation, but that's what this means. Then there is VNB margin. Now, this is expressed in a percentage. This is the growth of embedded value that is taking place. This will give you momentum कि actually growth हो रहा है business में कि नहीं. Over here, the higher, the better. And finally, we have persistency ratio. Persistency ratio is basically renewals. So people renewing every year or every 5 years, this basically knows that whether people are renewing a certain thing or not. And यार मेरा फाइल कहाँ है यार? Thank you, Vasant. You're the best. Okay, so I have some data for all these three parameters. Let's go through them. And let me also compare three companies. Vasant, what companies are we comparing? HDFC Life. Okay. SBI, okay, let's get SBI Life. LIC, of course, how can we forget that? LIC. Tuck, tuck. So basically, we just have to compare these companies and see who's winning. Yeah, that's all we're gonna do. So let's open this up and see what happens. Okay, lots of printouts here. Let's look at embedded value for HDFC Life. Here we can see this is 300. So I'll basically put this. Now this is a unitary number. So we'll put that number over here, 300, right? 300. Perfect. Or dekhte hain next kya hai. Overall dekho, is it growing? Yes, it's growing. So far, so good. Let's see what we have next. I'll put this on the side. Then there's SBI Life ka embedded value. We can see over here, this is 262, okay? 262.9. Chalo, let's not miss anything. This is lower. So far HDFC Life is winning in this metric. And then we have LIC. So inka hai 544. Clearly, LIC is winning this because they're a much larger asset base. Okay, next, HDFC Life, VNB. This is, remember, growth margin, percentage ka growth. The higher, the better. Here, this is 26.8. Okay. And then next, we have SBI Life. Over here, we can see that it is 18.7. Okay, 18.7. मैं percentage लिख देता हूँ. It doesn't get confusing. So far, HDFC Life is winning in this VNB margin growth game. And finally, we have LIC ka margin, which is 14.6 for the entire business. So this is a breakup of everything else, but you just look at this LIC India. This is 14.6. It's actually the lowest. So one thing is clear, HDFC Life ka growth is far greater than LIC, correct? That's a very big number, right? It's almost 2x, not exactly, but almost 2x. Now let's see persistency. Okay. Persistency is renewals. HDFC Life ka, what we'll do is, we'll look at the 13th month and the 61st month. 13th month matlab 1 year, कि 1 साल complete हुआ. 13th month, how many people renewed? And then there's the 61st, which is 5 years complete. Give it 1 more month, how many people renewed for the 5th year? So here we can see post-merger numbers lete hain. So over here, the number is 87%. And I'll put an and 51%. 87% is 13 months, 51 is 61 months. Now, is this good? We don't know. We have to compare it with everyone else. So don't look at it on a standalone basis. SBI Live, what do I see here? Okay, so we have 13th month, 61st. इसको ignore करते हैं. So 13th month we can see for FY20 grey is 86.1. Okay, 86.1%. And for the 61st month is 59.9%. Okay, so far who's winning? I think, it's a very close call. Okay, I will not say who's winning in this case. Finally, LIC देखते हैं. 13th month में हमारा आ रहा है 23, right? Blue one. So we're looking at 84.9%. So 84.99%. And 61st month, this is 51%. 51%. So clearly, I think we can see over here that the person who's winning is clearly HDFC Life again, right? LIC तो बहुत दूर है, बहुत obvious हो जाता है यहाँ पे when you look at these numbers. So clearly, in terms of growth, persistency, and actually growth is the most important thing, LIC is the laggard when you compare it to all these three. Now comes the most important part and the most interesting part, Adani. You must have read that LIC has exposure to Adani and this is not good for the company. Maybe that's why it's fallen so much. So first, look at this chart over here. All these companies from Adani Total Gas all the way to ACC has a total exposure of 81,000 crore rupees. The total loss before February was around 18,600 and after February became 56,000 crore rupees ka notional loss. Now that's a pretty big amount, but I think the question is, how is this connected to LIC ka total asset base? Is this a very big number or not? So I'll talk about that in the next section, which is the future plan section. अब इसमें एक interesting thought था, which we found over here is one, LIC is the only DII investor in all Adani companies. This is kind of peculiar. There's no mutual fund which is invested in any Adani company. Why is that? And there's another thing. If you look at any other group companies, like say the Tatas, so if you look at Tata Consumers versus say TCS, they have different investor set. But when it comes to Adani, when someone enters an Adani company, he buys the entire family. Entire family of companies. All of the companies mein, there'll be the same investor. So, aisa kyun hai? I think this is a bit peculiar that this doesn't happen with other industrialist ke group of companies, but it does happen with Adani. I have no idea why. So if you have any thoughts on this, put it in the comments below. I'd love to know what you think. Now let's talk about the future plans. One, very happy to know that LIC is now going completely online. Is trying to go online, and you can see these screens. You can see the UI UX of this is just marvelous. बहुत बढ़िया, वाह, मजा आ गया. Second thing, Adani को थोड़ा और closely देख लेते हैं. Adani, you have to compare the total exposure to the total asset base. So asset base of LIC is 35 lakh crore rupees. And the exposure is about 81,000. That's about 2.3%. So actually, it's not so crazy that the entire LIC will be pulled down because of it. Nothing to worry if you see it from that perspective. Anyway, आगे जाते हैं. The third reason is you are not subscribing to LearnApp के videos. Look at this stat over here. 85% of people watch our videos, enjoy it, like it, comment, but don't hit the subscribe button. Please एक काम करो. Write in the comments that you subscribed and actually hit that subscribe button because बहुत मेहनत लगती है इसमें. Okay, sorry for the interruption. Back to point number 3. Point number 3 is market share. If you look at this chart over here, you can see LIC, dude, owns this industry. और ये कंपनी कहीं नहीं जाने वाली है. आप जितना भी मार्केट गिरा दो, कुछ भी गलत बोल दो. Look at that. Do you think others are even close to competing with LIC? And I think it's brand recognition and trust. If you ask someone, who do you trust more? One of these companies or LIC? The aam aadmi will say LIC. Kuch bhi bolo. I also think personally LIC is always more expensive than the others, which means that the brand equity of it is much higher than the other guys. Only higher trusted brands can continue to charge more without a difference in service. Anyway, I think that's a branding masterclass, but I think that is also interesting. This company is not going anywhere. It's a freaking monopoly. Finally, there are these government policies. Now, when government policies happen, a large number of people have to get access to it. So, because LIC has such an amazing distribution of 13 lakh distributors, etc., agents, all of these government policies are distributed via LIC. So, that is also a source of money for them. It's also a great way to continue to penetrate into the entire India masses. I hope you found this video informative and you learned a bunch of new things. We did a lot of production, lot of effort, and we also did a lot of research. If you found this useful, say something nice in the comments. LearnApp is on a mission to upskill all adults in business and finance. You'll see some business cohorts coming up soon, and we've moved from only video courses to programs and cohort that you learn in sync. Not only do you learn from leaders, you also build in every single session, and that's how you learn. We'll be launching a new website and a bunch of other things. If you're excited about it, have any questions, put it in the comments. I will personally reply. See you in the next video.